So today I'm going to take you through my trading 2-on-2 portfolio as a 34-year-old in England. I'm going to open up my platform and take you line by line, stock by stock, through all of my profits and all of my losses, down to the pounds and pennies, including how much I'm making in dividends on each. I'll also be taking you through a couple other investments I have on InvestEngine, Coinbase and Moneybox to show you exactly where I'm putting my money and why. And right now in the market, there's a lot of turbulence going on in the Middle East, so I'll show you what investments I'm making in the short and medium term to take advantage of it while I can. So let's get started. On this channel, I've taken you through my portfolio all the way from 0 to 14 or 15,000 pounds, depending on the day in the market, and hopefully I'll continue to bring you along to a 100k portfolio. Many YouTubers will only give you broad updates when times are good, but I have always thought that the most useful updates are when the market is turbulent, because that's when what we do is the most important. So if you do appreciate that, please remember to click the like button below. It helps a lot. So right now, while there is a conflict in the Middle East, oil prices are surging higher and higher and the stock markets are dropping. I want to take you into my portfolio at the bottom, or at least a dip, show you where I am, and more importantly, show you what I'm doing and how I'm personally investing during this time. Now, remember, I'm not a financial advisor, and this is not financial advice or a recommendation. I'm just opening up and showing you my thoughts and my investment journey. Remember to do your own research and that investment values can go up as well as down. But let's get straight in. So this is the opening page of my trading 2-on-2 portfolio. You can see initially my account value of 14,200 with a total return of 1,500 and a rate of return of 17%. Now, just about a month ago, this was sitting at 15,300, £2,500 return, and I think it was about 27% rate of return. And as you may know, right now the conflict in the Middle East and rising oil prices are causing the markets to sell off around the world. So let's get into the stocks and I'll show you what I'm doing right now while the markets are low, and at the end I'll show you the stocks I've been investing in the last few weeks. My portfolio has two types of investments. I have investments for growth and for passive income from dividends. Let's start with growth. These four stocks are what I use for long-term growth. You can see I have the S&P 500, I have the iShares China Large Cap, and the two All-World ETFs. These four come to 3872 and about 27% of the portfolio. Just recently, I made a bit of a change. You see, last year during the first rounds of American tariffs, and while the markets were dropping, I made some investments into the top 10 companies in the USA, which you can see here. I invested when they were down, and after the tariffs subsided, the market recovered, and that combined with the recent AI boom meant these stocks did really well overall. Some up, some down, but overall I invested about £870 and made £222 or 25% profit in about a year. But I wanted to make my investing easy and not have to worry about the performance of 10 different stocks, so I sold these and moved it to VWRL, or the Vanguard All-World ETF you see here. So that's recent, but I would prefer to have it in a diversified ETF that I can pound cost average over the long term and have some diversification from the USA market as well, so this is around 0%. Then the S&P 500, my largest holding, where regardless of what happens, I'll continue to pound cost average over the long term on this one and continue to grow it. We're at 8.5% profit, which is not bad in a market dip. Now, the China ETF has at times been around 10% in profit, but China is also one of the countries most affected by the closing of the Strait of Hormuz, and as it gets a large portion of its oil from there. So naturally it has come down to about -1%, but it's also a good time to perhaps increase my position in. I haven't added to this one yet because I've been focusing on some dividend stocks which we'll get to, but I'll hold this for the long term. Lastly is my second All-World ETF, and yes, this does almost exactly the same as the first one, but this is an experiment I plan to run for the next 30 years until I retire. Simply put, I'm investing £1 into this every single day through an automatic pie. I want to see truly what happens if you follow all the rules and invest regularly, reinvest the dividends, and pound cost average daily into a well-diversified global fund and see what the results are over the long term. So it's been roughly 300 days and it's been at 8 or 9%, but down to 1.5% now. But the beauty, of course, is that while the market is down, it's also buying automatically into the dip every day to boost the growth down the line. My math says it could reach £1 million by the time I retire, but subscribe to the channel to see how it goes over time and if it reaches that. For my last growth stock, we're going to go into InvestEngine. This year, I opened up a SIP, or self-invested personal pension. It means I can get an additional 25% on all my deposits back from HMRC towards a pension that I can invest for myself. So if I invest £100, it will get a free bonus from HMRC of £25 to invest towards my SIP. Now, I can only withdraw from this when I'm 57, but much of what I invest in I don't plan to touch until then or longer, so it's a great way to get an extra 25%, especially if you think of the compound growth that the bonus brings. So I've invested in an all-world ETF. I've deposited around £300, down a bit with the market, and I'm awaiting £75 that you can see here, which takes 6 to 11 weeks to arrive, and I'm on week 9, I think, so it should be soon, and I'm excited to invest that while the markets are down. By the way, if you're interested in a SIP for yourself or InvestEngine as a platform, you can use our link in the description, and if you deposit £100 or more, you will get a free bonus of between £20 and £200 with our link, and I'll get something as well. Also, you can deposit that bonus into the SIP and get another 25% on top of that, so it's a really great return. I've done a whole video on SIPs if you want, but you can check out the link for your bonus. The next section of my Trading 2 and 2 portfolio is my dividend stocks for passive income. So these here are my dividend stocks. Now, just because they pay good dividends doesn't mean I don't get good growth from them too. One of my criteria for investments is that it must pay a good dividend, but also have a track record for share price growth. Some of these are up by over 30 or 40%. So we've got Simon Property, Realty Income, QYLP, EPL Properties, Lloyds Bank, LondonMetric Properties, HSBC and Aviva. My biggest growth has come from Lloyds Bank with 42%, although both Lloyds and HSBC used to be up over 60% a month ago. Aviva is my most recent purchase as I've currently got a 6.4% dividend. And speaking of dividends, here is the full table of all of my stocks and how much each of them pays me in passive income. Now these are at the rates while recording. You can see that QYLP is the highest dividends at 11.7% and also my highest income, followed by EPL Properties, Realty Income and Simon Property, and the dividends for my passive income stocks vary from 6.4% down to Lloyds Bank being the lowest of the main stocks at 4%, although it's paying 5.2% on what I invested. So in total, my portfolio is paying roughly £700 a year in passive income overall, and you can pause to go through each in detail if you would like. I then also have £5,020 in a LISA, which I maxed out this year with some interest, and another £90 in Bitcoin on Coinbase. I do need to add more to this, especially now while it's down, but I'm predominantly a stocks and shares person, and it's so enticing to put money there right now, but I do need to build this asset more in my portfolio. So let's talk about what I'm doing next and what I've been investing in lately. Since the AI boom, I think many of the tech stocks have been at quite high valuations, but I'm still buying a good amount of them through my S&P 500 and my all-world ETFs. So recently I bought about £800 of an all-world ETF, like we spoke about, and I think it's a great, well-diversified ETF for the long term. It's easy to invest in and add to, and it's something you don't have to worry about earnings calls or CEO scandals. You can set and forget. Especially now with the dip in the market, it's been a good time to buy. But mainly this year, with high-tech valuations, I've been building my dividend stocks, and that's been a big focus recently. I mostly stay to property and finance stocks for this. Like I said, I've recently bought some Aviva for 6.4% dividends, and it's grown steadily in the last years. This last week, I bought some extra shares in EPL Properties because it's had a big dip, so I see it as a good opportunity to add some here. Then I've also added to Realty Income, Simon Property, and a newer stock I've been investing in, LondonMetric Property, who essentially runs off the same model as Realty Income, but in the UK, and they have a nice 6.5% dividend at the moment. So those are the stocks I've been investing in lately and how I've built up my £14,600 portfolio. My plan is to keep steadily investing through all the downs and ups, but a little bit more during the down periods recently to get some investments at a better value and make my way through to a £100,000 portfolio and more. So if you want to see that, remember to subscribe. That is it for today's video. Remember to check out your free bonus with InvestEngine below, and I will see you next time, as always, on Casual Cash. Cheers.